Welcome to a new series, Alpha Hunters. So this series is going to start out on how to read stocks and use technical analysis. Then we'll quickly move into how to find trade setups and start putting in some trades. Yay! But today we'll just be looking at charts, some indicators, and begin to get a general idea of what we're looking at. See you on the green side. Ladies and gentle dudes, I'm going to spend this video in TradingView to just show you how to look at stocks and what to focus on in stock trading. Okay, so we're just going to walk around the screen here. As if you're new to TradingView, you might just need to get yourself familiar with like what the heck is going on. So up here, there's a ticker bar. Okay, this is symbol search right here. Also, if TradingView is your active screen, you can just type the ticker. As long as you type letters first, you can type in any ticker. Okay, so let's say Apple. There you go. There's Apple. It's easy. Now, if you don't know a ticker and you want to look up a company, just type in the company. So Microsoft, and there it is. Boom, Microsoft, MSFT. Okay, so those are very easy ways to figure out how to find the ticker, a company that you're looking to trade. Now, if you did notice, Google. So if you type in Google, so you get different stock exchanges over here. So if you want to make sure you're on the American stock exchange, just make sure you just look for the American flag. So just make sure that. Because sometimes you will come across companies, they are listed on several stock exchanges across the world. Wow, there we go. So yeah, you just want to make sure you're on the one you are wanting. Okay, so like I said, if your TD Ameritrade is your active window, you can type letters, and the stock window will pop up. If you type numbers, it will come up with time frames, so you change your interval. Now, the default is if you enter numbers, this will be an intraday chart, okay, of whatever, it'll default to minutes, okay? So, right now we're on a daily chart. Let's go to a 5-minute chart, right? Hit enter, and this is the intraday on Google. I'm going to just go and switch over to the SPY. So you can see here, like each one of these candles represents 5 minutes, okay, on the trading day. So the trading day opened here and is just kind of traded down sideways, kind of most of the day so far. So that's how you kind of get around. So if you want to go to a 1 minute, just hit 1, and it will go to 1 minute. If you want to go to 15, just type in 15. Now, if you want to go to a daily, you got to type in 1D. Okay, 1D, and that will send you back. That will put in a daily. Okay. Now, if you want to put in a 1 week, 1W. Okay. If you want to do 1 month, 1M. Okay. So that's how you do that. So there's also up here next to the next to the ticker search symbol, you have time intervals up in here. So obviously these are the 3 that I have chosen to save as favorites, and then they pop up right here. Okay, and so you don't have to do that, and honestly I should probably just undo that, because I mean most of the time I type it in anyways. I think they're just mostly there for like when I travel. It's just easier to click it up there than to type it in on my laptop. But there is that. Up here you have different candle or timeline or time segment type of looks. So you got line charts, area, which is a line chart but is a shaded underneath. Halo candles. So it just kind of depends on what how you want. I like straight candles myself. Helsinki is kind of neat. It's kind of very see the trend and flow. So yeah, I mean, you can spend more time at figuring out all these. I'm not going to spend time on that today. So we'll just keep it right on moving. So I'm on a candle chart, right? And these candles represent whatever time horizon I'm on a daily. So each one of these candles is a daily candle. Okay? So the way you read candles is up here in the top left. Up here is the OHLC, which is the open, high, low, close. Okay? And then after that, you have a plus and minus number, and then a plus minus percentage number. Okay, so that's just the percentage change on the day, and that's just the actual number change on the day. And I know that's small. Let me see if... But the way you want to read these candles, okay, so we'll look at this one right here. I'm just going to try to get some big ones, the way it's easy to see. So if it's red, if it's a solid red, that means the close is below the open. Okay? That means the close is below the open. So how you read this candle, this red candle here, is the open is the solid flush here. Okay? Now there is a little wick on top of it, and let me see if I can find okay, so like this red candle. So you see a wick coming out the top here. So that top point on this wick here, I'm gonna zoom in. That candle right there, that is the high. That peak, that wick on that red candle, that is the high. Okay, so the flush part, that is the open. That wick on the top, that's the high, and then the flush part on bottom, that is the close. And then the wick on bottom, like this candle right here, you got a wick on bottom. That is the low, okay? Now, for green candles, all right, this is a good green candle because it's got all of it. It's very clear. So the green candles, the close is above the open, okay? So that's how you know it's a green candle, okay? So for this one right here, you have a flush bottom right here. Then you have a lower wick down here, okay? And then you have a flush top up here. That would be the close. And then you have a flush top up here. That would be the high. So you got the flush bottom, the low. You got the flush bottom down here. That would be the low. You got not the flush bottom. You got the wick bottom down here. That would be the low. You got the wick top. That would be the high. And then you got the flush close right there. Okay, so that's how you read candles. Okay, so all the reds and all the greens are just like that. The only difference between the red and greens is the red open is above the close. The close is below the open. The green candles, the close is above the open. Okay. So that's how you read candles. So over here on the right pane, this is the stock list, and you can make some. You can probably now there is tradingview is a freemium type service, so you can use this for free and you can do different charting stuff. Obviously, there's certain things that kind of come with it that are in the premium type package setup. And I think as a free member, you can only have like one stock list. So you might only be able to have one, which for you newbies, I don't know, might be good enough. And I actually know professional traders that don't even pay for it. They just use this because, I mean, you don't really need it. You don't need it. I mean, you just do what you need to do in one list, and that's pretty much it. But you can throw any symbols into here, okay? So the way you put symbols into here, let's talk about the way you take symbols out. So I'm going to take out this one. It's just hit that X right there. Boom. Okay. Now that's it. You just take stuff out. 'Cause I know whenever you guys make an account, like there's going to be a list over here already. So if you want to clean that out, just go ahead and clean it out. But make sure you make an account, or it's not going to save your changes. Make sure you're logged in. I'm going to add that back. So I'm going to add that company back. So if you didn't see where I went, you had to add stocks over there. Hit this add symbol. Hit that. A little add symbol box, stock box pops up. So like just like earlier in the stock box that popped up earlier, you can search by company name. So I know Frost Bankers. I know that was it. So boom, you can, and you just click on it, and it already added it over here, CFR. Okay, so that's kind of how you do that and kind of manage stock symbols and stuff like that. I'm gonna put that back in order, and yeah, if you want to rearrange it, you just drag and drop into the order you want them to be in. It's not complicated. So down here is the kind of overview of the stock, what's trading at for the day, and the key stats kind of area. Kind of give you a brief overview of the stock, of the company, right? So it'll tell you the day's range and where. So obviously it opened here. I do wish it would actually tell you the open right there. That would be kind of nice, but it doesn't. And then the 52-week range. So these are just some very brief things to kind of look at. I don't really mess with the key stats too much, but you got different things down here like dividend yield, volume, average volume, performance. What's the kind of technicals say about it. You also have performance here, year to date. 1 month, 3 month, 6 month, 1 year. 1 year and year to date is not the same thing. Year to date is from the end of last year. So whatever trading day was the end of last year, from then to now. 1 year is the past 365. Okay. 250 trading days in a year. I believe it's 250. So there's just some brief overview stuff for the company. As you kind of bring it up. So even if I don't have a company in this list like Netflix, there you go. You can pop up and see just some brief company history, brief overview of the company. Okay. And then let's say you want to set price alerts. Okay. So I'm going to click back over to the SPY. So let's say I want to have a price alert. Let's say if it broke down below this candle, this green candle here, I wanted to be alerted to that. So I can come over here, and there's a plus sign I can click on. So I can hit that, and I can hit add alert for SPY, alert for EMA, but I want the alert on the SPY if it breaks down below that candle. So I'm just going to hit add alert, and there you go. You'll see it pop in, and then whenever the SPY breaks that or hits that level, it will ping me. It'll pop up in here like, oh, SPY is breaking through that level. So it's very nice feature. I would say that feature is probably more good for day trading. And then over here, you can come and click into your alerts. It's the second box down, right? So here's your watch list and stuff in this box. Here's the alerts, and here's that alert. Okay, if you want to get rid of it, you just hit this remove button. Okay, now I tell you what I'm going to do. Let's see if we can get alert in right here. Boom. All right. I'll put alert real close to the market, see if it breaks through that. I'm going to actually bracket this. Of course it would do that. All right, so I bracketed pretty much that candle. So we're going to keep going, but it will come back and ping me here in a little bit, okay? All right, so when you are starting to look at stocks, okay, What we want to be able to identify is very basic. I'm going to zoom out here a little bit. We want to very basically take in, not like all of its data, but a good chunk of time and just identify the trend, okay? We want to identify what trend is it in. So the cues, all right, so hold on. There's the SPY crossing something. So I just go back over to the SPY. Oh, and okay, it went higher. So that's how that works. It just pops up with a, hey, it crossed your threshold and it alerts you. That's how that goes. Okay, but back on to trend. Okay, so I'm going to remove all of these indicators and things. All right, well, I guess the lines can stay. But what you want to do is very clearly and understand very clearly and easily look at a chart and say which direction it's moving. Okay? And basically you look at where it's starting over here on this left side and where it's ending over here. If it's bottom left to top right, it's an upward trend. If it's top left to bottom right, it's a downward trend. And if it just kind of floats around here in the middle, it's just kind of a sideways moving. Okay? So let's go look at some different stocks and just real quick, and we'll see what kind of trends we can see. So so here in the middle area had a nice down pattern, downtrend. Okay, it was kind of choppy here a little bit, and then it had a downtrend, and then it looks like it's kind of come up a little bit, but it hasn't moved too much. Kind of started out in the middle here, and it's still kind of in the middle over here. So over that time period, it's kind of flat, but there was some movement in the middle. Let's look at Boeing. Boeing's kind of a little downtrend for this time. I'm not going to zoom out, but so you're going to get a little downtrend here. There, we can do Netflix. Upward trend, right? Upward trend from the bottom left to the top right. Easy peasy. So when you identify trends, so one of the key parts about identifying trends is to know the trend so you don't fight the trend. So don't fight the trend. Like if we get a trend here, well then don't look to short the trend, you know? Maybe look to buy it on a pullback. But that's all you want to do when you want to try to identify the trend of a stock. And that's kind of like the first thing. When you first look at a stock, you want to be able to identify it. Identify the trend real quick, okay? Now, let's look at some gaps, okay? Now, there's 4 kinds of gaps, okay? And the nomenclature I use for them, and I realized in my last video, when I did the text box, it was probably really small. So I increased my text size for these boxes, so hopefully it's not as bad. If it is still bad, let me know down in the comments, and I will increase the size again. But I'm trying not to take up the whole field because we're still looking at things. The first gap we'll talk about is the bullish gap and go. Okay. Second gap is the bullish retest gap, RTG. Third gap is the bearish gap and go. Fourth gap is the bearish retest gap. Okay. Those are the 4 types of gaps there are. Okay, so what a bullish gap and go is, I'm trying to find one on this chart. I don't really see one on this chart. Oh, yep, here's one. Bullish gap and go. So what a bullish gap and go and bullish retest gap, all that means is the gap was up, okay? The gap was up. Bearish gap and go, bearish retest gap, all that means is the gap was down. Okay? Now, gap and go, what that means is the direction of the gap was bullish, but the previous candle was bearish, right? So here we got a red bearish selling candle. The next day it was a gap up. So that would be a bullish gap and go, right? So we got a red selling candle, and then we got a gap up. So that's a bullish gap. But since the previous day was red, this would be a gap and go, okay? A bullish retest gap, it's like this one right here. It's a green candle the day before. Here's a gap up. So this would be a retest gap. A bullish retest gap, okay? Now a bearish gap and go, let's see if we can find one. Bearish gap and go. So I don't see any bearish gap and goes, but here's a bearish retest gap. So you have a red candle, right? So that's a bearish candle, but gapping down is bearish. Okay, so this would be a bearish retest gap. Okay, because it's the same. The move of the gap is the same as the previous day candle. Okay, now if I can find a bearish gap and go, well, here's one that's not perfect, but we have a green candle here and we have a gap down, so that would be a bearish gap and go, right? So you have a green candle and then you have a gap down a little bit. Oh, let me zoom in. You have a green candle and you have a little bit of a gap down, so that's a bearish gap and go. Okay, now there are ways to judge strength of certain gaps and stuff like that. I'm not going to cover that here, but those are the different kinds. Those are the 4 different kinds of gaps. You know, you really kind of just need to you just want to understand and know, because gapping psychology is pretty important to market movement. So okay, so if I'm going to delete that. If you want to add in indicators, so up here, the indicators field is, field to add in indicators is right here. It says indicators and strategies. So there's many different indicators you can add in. Okay, I'm going to talk quickly about 4 indicators. 2 of them are actually right here, moving average or moving average exponential, but I'm going to show you how to find them. So right here in search, it's very easy. Just type in moving, and then anything that has moving in the name pops up. So you can see built-in indicators, built-in strategies. Like these are people that built a strategy, basically using moving averages. That's what's really cool about TradingView is there's a whole community. You got community scripts and stuff like that, but don't worry about that. Just stick to the easy stuff. But moving, so we got moving average and moving exponential. So the way I like to run mine is I like to have 3 moving average exponentials and I have 2 moving averages. Okay, now you don't have to do that. If you just want to do 2 and 1 or just 3 exponentials, you know, fine. You know, you just do what works for you. But you just click it. If you want to add in 2, you just click another one. If you want to add in 2 moving averages, you just click 2 of those. And you see them right over here. EMA, exponential moving average, moving average, and then moving average. Okay? So right now they're all set on 9, 9, 9, 9. Okay? Now you're like, what's the difference between exponential moving average and moving average? Well, I'm going to get rid of this one. And I'm going to get rid of this one. Okay? So we have I'm going to change this color real quick because it's almost the dang same. Okay. So the exponential moving average, they're both set on 9, okay? But this one is kind of like a reddish color, and the moving average is a bluish color. So as you can see, the red one is closer to the candles and the candle movement than the blue one. So it moves faster. And this is the way it's calculated. It puts more value on the more recent candle action than the moving average calculation does. The moving average just takes, the previous however many periods and just averages them together and gets a calculation. The exponential it weights it a little bit more to the recent candles. And that's the only difference really between the two. But they're both set on 9, so that means they're taking into account the past 9 periods. 9 trading periods. So it would take into account this trading period, this one, at 4, 5, 6, 7, 8, 9. So all the way to here to the one we're currently on is taking into account all 9 of those, calculating what it needs to calculate and getting a value, and that value is this right here, that line. Okay, so that's how moving averages work. Now, if you want to add in, I know some people like MACDs and stochastics. So MACD, it's indicator that's kind of at the bottom of the screen. So you got some lines here and a histogram. So I'm not going to really go into how to read all this, but I just kind of want to show you kind of how to add in some indicators, and there's a lot more indicators on how you want to add in. I can go into other videos later on like how to use certain indicators and stuff like that, and spend time actually in a video explaining why certain indicators or what they mean on certain indicators. But the thing about indicators is they all calculate based on price action and potentially volume. They pretty much all calculate on price action. So all the candles that you see up here, they all calculate based on this price action. Down here, the volume, some of them might take into account this volume, but they just about all they all take into account the price action. So what I'm saying by saying that is, now let's set in stochastics. It's also called RSI. So what I'm saying by saying that, and you can see the stochastics, that's the way you add in stochastics and MACD, is if you just learn the candles and the charts and stuff like that, you don't really need to focus on indicators. Indicators lag to what actually is going on in the market. What the market is telling you is about to happen. Okay? By actual price action. Actual price action happens well before the market, or well before an indicator will tell you. Okay? So I'm going to clear that out. So that's, there are many different indicators that you can use, but they all rely on that price action and volume. So why not just learn the price action? Just learn the price action, learn what the market is telling you with gaps, long bar movements like this one. That's the long bar movement. That's very bullish. Like that's a very clear bullish indicator. Like, okay, came down here and went sideways, and we are popping out very strongly to the bullish side. And then look what it did after. So I would say learn the ways of the stock. Now, what you want to focus on in trading, well, I was talking to my friend Frank the other day, okay? And he mentioned how he started making money when he stopped gambling and started doing methodical trading. And I texted him back, predictable equals profits. So as you start looking at stocks and you can't figure out what's going on the first 10 seconds, like it's not clear to you, don't trade it. You don't need to trade it. Just move on. That's the best piece of advice I can say. Just find things that are predictable, that work, trade setups, your strategies, You know, stocks, you don't want to have to guess what's going on. It should be clear and obvious. You know, but this is why you will see on my channel a lot. Excuse me. You see on my channel a lot the SPY. Okay, this is why I focus a lot of my trading on SPY, as it just slowly grinds higher. Okay, I mean it's just been a slow grind higher. Okay, but as you look at other stocks, you know, if you can identify the trend, you know, get in on a pullback. You know, maybe into some, you know, moving averages as they're coming up. I do highly recommend just having moving averages up on your screen like this, because moving averages, believe it or not, they're kind of like support levels. You know, people buy off the look at the 50 here on the SPY. People bought off it here, here. I almost got to it there, but they are trend lines. People buy off of them. So, yeah, I mean, moving averages are probably just one of those very basic indicators to have up on your screen. And just so you know, this blue line is my 10, this yellow line is my 20, this gray line is my 50. Yellow line, or kind of orangish line, this is my 100, and this blue line is my 200. Okay, the 100 and 200 are long-term, kind of like big time funds like pension funds and stuff like that. They watch those levels quite often, quite a lot. Okay, but you know, most stocks look for, you know, for most stocks, you know, look for long trades is going to be the default, you know. So if you can become a really good long stock trader, then you will be doing great, because most stocks are going to go up as the market goes up. You know, they push the market higher, and the market kind of winds up pulling them higher. It's just the way it goes. You know, another thing you want to focus on is understanding pricing levels and pivot points. And is there a good reward to risk between levels? Understanding pricing levels will give you an idea of where to get into a trade and where to put a stop loss and where a potential profit stop would go. It doesn't matter the time frame of your trade, but learning how to adjust stops, especially stop losses, to those levels will help you avoid unnecessary losses. Okay? So like this area, with this gap right here, I was definitely saying like we're going bullish. I thought we'd have a 2-day pullback and fill the gap and take off, but we actually had like a kind of a 4-day. We'll count that as a 4-day pullback, and then we were out of here, right? But it's easy. You just bracket this candle. Well, you put an entry like right here at the top of this candle, below this low right here, and then there you go. And then as we gap up out of here, like basically the next day, what you would want to do, like, because this is a big pivot point. If we break that, we're definitely coming lower. You know, but you would want to, you know, as we gap up out of here, you definitely want to come move your stop to right here, right under this candle. Just right there. So that's what I mean by pivot points and understanding pricing levels. Okay. You know, the next thing is just to start looking at stocks and become familiar with what you are seeing. It's going to take a lot of practice to become really good. So you got to spend the time practicing. So here's some homework if you aren't sure how to practice. Now, don't call it homework, you know, you do your thing. But I'm going to give you just some basic ideas on how to practice, okay? So build out a charting setup. If you don't have a charting setup, you know, go build one out. It's not hard. It might take you like, you know, 10 minutes to kind of build one out. Just put in some basic moving averages and stuff like that. You know, maybe at least 3 exponential moving averages or moving averages. Look at 5 different stocks. Identify 3 pivot points per stock and find 1 gap type per stock. And notice what the performance was after the gaps. You know, if you had to take a trade on each of the stocks now, which direction do you think it's going? Long or short, which is long is up and short is down. Where would you put a stop loss? And calculate your 2R target. And these could be your first paper trades. Track them over the next few days or until the trade's in. Okay? Have some dang fun with it. It's going to be a lot of work in the beginning, but it's going to be dramatic. Like when you're involved in it and you kind of see like things that are going on, like GameStop back in the early part of the year when it was doing this, this was nuts. But it's fun. That's the fun time. I get it. When you're getting into this, is a lot of learning to do, a lot of practice, a lot of familiarity. But you'll get there. Have some fun with it, and you'll get it going. Okay. Alrighty then. Take care, Alpha Hunters.